here on the Colour of Country Life, Flow FM. Good to be joined by Andrew Whitelaw from episode 3. And Andrew, I guess there's another episode of this.
Well, it's Groundhog Day. Again?
Yep, Ricky. It feels like we're talking about the same thing over and over again, ad infinitum. The big sort of news in the wheat market this week was, again, Putin and what is in Putin's mind. And we keep saying that the biggest driver of the market in the last couple of months is what Putin decides to do at a whim. And on the weekend, they basically said that they were going to blockade the export of grains from Ukraine due to the fact that there had been a drone attack on a couple of Russian ships. So that caused, obviously, a big concern in the market. So on Monday, we saw like a really big spike in global sort of futures values. Over those sort of Monday, Tuesday, markets were probably up close to $40 a ton. And then really what happened is Putin's actually had his bluff called a little bit in that Turkey and the UN have said that they'll support and allow the continuation of grain exports. They'll escort those vessels. And so Russia has came back and said that we will allow exports. I don't think they really had a chance. I don't think they were going to cause trouble with Turkey and risk closing the Bosphorus. And so really it's kind of up and down. You know, the market reacted on the news that exports would continue, and it lost most of its value, and it was back to where it was on Friday.
Now, I have to say, the market is usually right on this, but I did feel the market jumped a bit early on this one because there were very early indications that the UN and Turkey were going to stand up to Putin on this one, as they did. Did the market get a bit spooked?
The market's always going to react quickly. It reacts fast. It always does. And so that's why we see bigger swings in, say, the futures market than the physical market. You know, if we look locally in Australia, there wasn't a huge reaction to the news in Australia. That's probably also due to the fact that we had the Melbourne Cup holiday, and so we had a lot of the grain trade were on a long weekend. So really farmers didn't really get any advantage from it because the market didn't massively move. So I think, you know, yes, there's an overreaction there, but that's what tends to happen in futures markets, especially when there's a big bit of news that could have, in theory, caused a lot of supply to come off of the global market. And it's a supply that is needed. You know, we spoke about it before, loads of times, Ricky, on, you know, it's important to have high grain prices for our farmers, but it does also pose a food security risk around the world in that we've got places like Somalia, Ethiopia that are, you know, suffering through famine, and they need grains. And it's a looming issue in food security. It's
glad to know that at least on Thursday morning, our time, Australian time, a peace deal had been reached between Ethiopia and the warring forces there. And some of the problems had been that accusations, just like we've heard with Putin, that food was being weaponised, that food was being denied to people fleeing the conflict. But I think that, as you say, that's going to be at the lower end of the pricing market, where that at least finds people, with an estimated 50 million people around the world on the verge of starvation.
Yeah, it's tough when you look at it in that sort of context. In that we talk about markets as being, obviously we all want high prices, but there's a lot of people out there that need grain, and obviously the UN food programs will buy grain from various countries at market rates and then export it to those nations, and that becomes a difficulty if supply is just not available.
Now, on the canola front, the golden fields are gone, as it has to do, and the first crops have started coming in on the west coast of South Australia, where it's been comparatively drier. The price seems to have been fairly buoyant, really, on canola. It's had some dips recently, but it's still held up pretty well compared to long-term averages.
Oh, it's still massively high compared to where it has been in the past. You know, if we look in the long term, you're really talking probably sub $600 a ton around the nation on average. And, you know, now we're talking well above that on average. But we're still a little bit lower than other origins like Canada and France. And even though it's expensive, the price-wise, the cost of producing that this year, fertilizer, chemicals, is high. But it's still a pretty good number. So we're going to have to see what happens there in terms of whether whether we reach up to meet global markets or whether we stay at a discount for longer.
Yeah, there had been big estimations before all this flooding started happening in the eastern states that there was going to be a record crop. I'm sure we won't reach that, but as tragic as that is for some farmers, it's probably going to mean there'll be a price positive for those that can get their crop in good condition.
Yeah, I think we still need to wait and see what happens with the likes of canola. We know there's going to be fields that are going to be wiped out, but we also know there's going to be fields that will have a yield benefit, and we also know that some of the oil content will be higher. So if we've got higher oil content, well, the demand actually drops for the volume because, well, if you've got enough oil in it. So I think with these floods, we just need to it's going to be bad in a lot of places. We just need to see what happens in the next, well, I was going to say the next 2 to 3 weeks, but it's probably more like the next 6 to 8 weeks when harvests start to roll.
Well, Andrew, we catch up with you from time to time, but people can get their updates online from episode 3. What's the address?
Just numeral3.net.
Yep, you can get regular updates almost daily from episode 3's team, yourself and Matt Dalgleish. Andrew Whitelaw, thanks for joining us again on Flow.
No worries, Ricky. Anytime.